So let's say you don't have perfect credit, but you're looking to get money to start or grow your business. Well, no problem at all. There are just some things you need to do to set yourself up for success so you're able to actually get funding, even if you have credit issues. Now, in lending, we call this compensating factors, which means if there's one thing that's wrong with a file where it can't get approved, such as credit being bad, and there are other compensating factors or other strengths that can compensate or help you overcome that weakness of, in this example, bad credit. So today I'm going to teach you a lot of these different ways to overcome credit issues by giving lenders strengths in other areas where they're still going to want to give you money. We got a lot to cover, so let's dive in. So while business credit is in the name of the business, personal credit obviously is a factor with getting financing. Look, I'm the business credit guy, and anybody that's going to tell you that personal credit's not important when it comes to getting money for your business is lying to you. It absolutely is. As a business owner, your personal credit's very, very, very important, but there are ways if you have credit issues that you can minimize the impact on your business by, again, kind of coming in and creating some of these compensating factors by being able to create strengths in other areas to overcome the weakness of having credit. Now, I oftentimes refer to something similar when I talk about the 3 C's cash acquisition formula. And what this really looks at is this. There's 3 primary things that lenders look at to determine if they should approve you for financing or not. And credit is one of the things, collateral is another, and cash flow is another. Now, in today's lending world, we see that there are oftentimes a little bit of each of these that you can get money on just based on that strength. So for example, if you have good personal credit, well, there's money you can get just based on personal credit. If you have collateral, like some kind of assets like account receivables, equipment, inventory, there's money you can get just based on that collateral, that asset. If you have consistent cash flow, well, there's money you can get based on just that cash flow. But this 3 C's cash acquisition formula basically says, hey, look, if you don't have a strength, that's okay. Lean on your other strengths. So this really is the best place to start, is to know that if you have credit issues, then you can't get with lenders and programs that primarily look at credit as one of the main factors for approval. So let me give you an example. SBA. SBA, you need to have good personal credit. There's no way around it. So that means that you want to go to a lender and a program that doesn't rely on personal credit for approval, such as something like merchant cash advance or cash flow financing that only looks at cash flow, or account receivable financing, stocks, bonds, 401k, IRA financing that looks at collateral and not credit. So it's the first thing you can do to overcome bad credit is know the 3 C's and think about what you can do to improve all of the 3 C's, especially the 2 that are not based on credit if you have consumer credit issues. Steve, what's up? Thanks for coming in. And Mike says, hello, everyone. Good afternoon to all. And thank you for the great info. I appreciate that. The business credit knowledge becomes like the gospel once you learn it and want to share it with everybody you know. That's awesome, Mike. I appreciate that. And it's good you're doing that, because 90% of entrepreneurs know nothing about business credit. So spreading the wealth helps a lot of other people. And SK says, okay, I'm up in here. All right, SK, welcome to our stream today. Okay, so let's talk about business credit. You know, business credit, the interesting thing is this is the way I oftentimes describe business credit. What if you don't have a strength? If you don't have cash flow, if you don't have credit, if you don't have collateral, well, then how do you still get money? Well, what I say is if you don't have a lendable strength, such as credit, cash flow, or collateral, then make one, create one. And business credit gives you that ability. It gives you the ability to create a strength for your business if you don't have cash flow, credit, or collateral, or make it even easier, make you more lendable if you do have good credit, cash flow, or collateral, or make it where you don't need personal credit because the business credit can carry the way. It's like a kind of a fresh start, because your business can build its own credit profile and score that can be used to qualify for financing to be able to fund your business. So business and personal credit are separate. So you could build business credit regardless of personal credit quality. So your personal credit quality, it just doesn't matter. It has no effect on your ability to build business credit. It's also why I describe business credit as a catch-all. It's something anybody can get, even if you don't have good credit, cash flow, or collateral. Now, did you know that you can be issued a failing business credit score, though, even if you have no credit? I've talked about this before and even shown oftentimes examples of credit reports where this is the case. The problem is Experian and Equifax will give you failing scores that indicate you're very high risk, even if you have no credit with them. The minute they know your business name, the address, and the NAICS, or your industry code, which they oftentimes get from your Secretary of State when you file annual reports, they will issue you a credit score, and the credit score will be a bad one if you have no positive credit. Now, you got 2 things against you. your personal credit's bad, and now you have bad business credit because you haven't built it. So now when you try to get money, it becomes more and more and more difficult. They look at your personal credit, they see issues. They look at your business credit, they see issues. And now your business has a track history, or your business now has a reputation of having bad credit, and so do you, and it becomes an uphill battle, right? So the easy way to offset this is to focus on building business credit, because even one positive account added to your business credit report will take you from a failing score to a good score. Now, one request: if you're getting value from this training, hit the like button, hit the love button, hit the share button. As a matter of fact, in real time, I can see how many people are doing that, and it means a lot to me. I want to help as many people as I can. By you liking and loving this, only if you're getting value, then that shows me that we're on the right track, you're getting value, and it also shows the other social channels, and they invite other people in to check this out, so I appreciate it. So again, you can get good business credit where personal credit doesn't matter. You can get away from personal guarantees. You can get away from using your personal credit profile with a lot of different types of credit you may get just by building business credit. And as a result, business owners aren't personally liable for the business debt. Your personal credit is not a factor in approval or denial. Plus, business credit can be built really fast. I mean, you can get to the end of this process. And what I mean by that is Visa card, MasterCard, computer leases, auto financing, credit at almost every major retailer, all without a personal guarantee, all without a personal credit check. You can get there in only about 6 months. Now, don't get me wrong. If you're working with Credit Suite, if you have the expedited path, it takes our clients about 6 months to get to the end. If you're doing it on your own using our training, it's obviously going to take longer. It could take you 2 years or more. But the bottom line is you could build business credit very quick because your scores are just based on how you pay your bills. So you can get this established in a matter of months. And business credit's a very valuable asset because you could have greater borrowing ability just because you actually build business credit. As a matter of fact, limits on business credit cards are 10 to 100 times higher than consumer credit cards. That's not from me. That's from SBA. And it also goes a long way to helping you get approved for credit and financing. Again, we call this a compensating factor. So let me give you an example. You're applying for financing. They see your personal credit's challenged, but they see you have really well-established business credit. What this tells an underwriter is, look, you had some bumps in the road in the past, even when you were getting your business set up. But when the business is set up, the business is doing the right things. The business is paying its bills timely. The business has a history of paying its own obligations. And since you're applying for business financing, that goes a long way and more important than even your personal credit in a lot of type of financial situations when your business can prove itself. So let me give you an example. I can go to Staples, build a business credit profile and score, and I can say, hey, I want to get a business credit card with you, Staples. I don't want you to look at my personal credit at all. And they say, well, we need to look at your personal credit to make the decision. You say, no, you don't. My business has its own credit profile established. My business has a track history of paying its bills is agreed. And I'm getting a credit card for the business. You don't need my personal credit. I don't even know why. And Staples says, okay, we'll look at your business credit. But a warning, if your credit's not established, you're going to need a guarantee for approval. Okay. Then they pull your business credit report. They see 8 accounts, paid as agreed, good scores. They approve you just based on that business credit quality. So it's a perfect example of a compensating factor. And by the way, not only is this a realistic scenario, every major retailer is exactly the same way. Macy's, Nordstrom, Sam's Club, Costco, Office Depot, Staples, Home Depot, Lowe's, Amazon, Walmart, Nordstrom, Macy's. I don't know if I've moved them. I mean, almost every major retailer, from Wawa that sells gas to grocery stores like Meijer, they all sell business credit, or they all offer business credit cards without a personal guarantee or credit check. They do that because the establishment of business credit is a compensating factor for not having good personal credit, meaning that we're able to not even let them look at the personal credit just because that business credit's established. So again, this is how we get past damaged personal credit, is that we establish strengths that tell lenders and credit issuers we're worthy of being issued money, even if and ignoring our weakness because of our actual strengths. So look, I've spent 2 decades in lending, and I'm really good at this, really good at it. It's how I built a mortgage company the first year to $1 million business, because I got really, really good at telling really, really good stories to underwriters. I was able to do FHA financing. I was able to go to underwriters. I was able to do subprime financing and go to underwriters and say, look, I know the credit's damaged, but here's all these other strengths that you need to look at instead. And I was able to sell the strengths and then ignore the weakness and approve the file. So I don't care if you're applying for a home loan or you're applying for a mortgage or applying for any kind of loan or a credit card. These compensating factors work and go a long way to helping you actually be able to get approved. So access to loans or credit lines, you can fund your business using Profits to Grow, using business credit. Okay. And again, it's nice because any business owner can get it. Doesn't matter if you have personal credit issues. Doesn't matter if you don't have collateral. Doesn't matter if you don't have cash flow. It doesn't matter if you're a nonprofit. If you have a U.S. entity, you can build business credit. You don't need trade lines. You don't need shelf corporations. You don't need any of those things. And Joe Good says, hit the like button. I love that. I appreciate that. Thank you very much. Hola. Thank you for coming in, Robin. Hola, hola, hola. And I was speaking Spanish just yesterday. I was in Costa Rica for the last week. So you're speaking the language I've been speaking the last week. And Mike says, Ty, this morning I got pre-qualification from Chase. Do not have any vendor lines reporting. Should I go for it if I'm pre-qualified? I'd look at the fine print. There's a difference between pre-qualified and pre-approved, but pre-qualified means that you preliminary meet their standards for them to send that out. So it's something to definitely consider. And as Mike says, good point. Once you establish business credit, you start to get pre-qualified for business credit card offers, even if your personal credit's damaged. It's another thing that you'll start to see. Okay. And Durati. I'm sorry I messed up your name. I tried. Finally got alive. Hey, Ty. Well, I'm getting started with the partner program on the 11th. Can't wait to work. I look forward to working with you. Mike says, you are really, really good. I have over 10,000 in vendor credit and started my business on Sunday officially. Awesome, man. Congratulations. You're off to a good start. Steve says, so say you personally guarantee the first couple of business credit card accounts. At that point, can now credit issuers know that the existing business credit is personally guaranteed or not? They can't know that. They won't know that based on where it's actually reporting, but you can't remove the guarantee once you apply it. So some things to keep in mind there, Steve. Really good questions. So business credit doesn't happen automatically. You have to be very conscious about doing this. And what I mean by that is that if I go into Target offers me a 20% discount if I get their credit card. And I know that credit card is going to report to the Consumer Credit Reporting Agencies. Like my mind in default knows when I get a credit card, it reports to my personal credit reports. But 97% of trade vendors don't report to business credit reporting agencies. So almost 9.5 out of 10 times you get credit with a retailer or a vendor of some sort, they don't report to the business credit reporting agency. So you have to be very intentional in building your business credit. Now, you also want to improve your fundability. It's not just about building business credit, but again, it's about compensating factors. So I like to describe fundability like this. If you're building business credit and you're applying for vendors where you have no credit established already, none. The problem is, all they have to go off of is your application. They don't have a credit history. They just have your application. So what's on this application becomes extremely important to sell the credit issuer that you are worthy of credit just based on how you actually set up your business. And it's the same way when it comes to getting money. Now, I describe this as a series of checks or X's because think about it like this. When you apply for credit card, a credit line, or financing, a lender's computer is underwriting the file. And what it's doing is it's looking at all these points of data, and it's kind of either assigning a check mark that all is good or putting an X that things are bad. Now, certain X's will automatically push it for manual underwriting review. In other cases, it's a matter of how many of those X's you have that push it to an underwriting review. So our goal is to no credit issuer and lender requirements, meet them all. So the computer goes check, 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 check. And if they do have an X that pushes it to manual review, we have enough strengths to overcome the weakness where we then have the intention of still being able to come in and being able to get approved. So a lot of things we cover here, but when it comes to fundability, we talk about a lot of the common stuff, having a business address, a business phone number, having a business website, being everything legitimate online, everybody matches each other, your Secretary of State records match the application. We talk about a lot of that stuff. Personal credit scores are definitely a factor. Business credit scores, we've talked about that. Sales, gross profit, more, all these kind of things will really tie in to your fundability. So whether or not your business is listed the same where everywhere is a big thing. It's got to be listed. Same address, same phone number, same name. Having a professional website, a professional email address, having a URL that matches your business name is very important. Even the timing, for example, of when you apply for a loan. Now, there are a few things you could do to help lenders see that your business is fundable, okay? So, and it comes with how you set up your business. You can come in and set up the right business structure right from the beginning. Have a corporation versus being a sole proprietor, for example. You can do the other things that we just talked about as well. And that really goes a long way to setting up your fundability. So making sure that your business has separate contact information, a separate business phone number, a separate business address. Okay, all of that stuff is separate from you personally. That goes a long way to make sure that you establish your fundability, as well as the email address, the website, some of the other things that we talked about as well. Avoid PO boxes, avoid UPS addresses, avoid iPostal type addresses that are really mailboxes, but they make themselves out to be virtual addresses when they're really not. Getting your phone number listed with 411. This is one of the biggest secret criterion that lenders have, because what it is that they know that established businesses are picked up in 411 and unestablished businesses aren't. So if you're like Mike and your business just officially launched Sunday, you are not listed with 411 and you won't be for quite some time. So the way around it is go to a place called listyourself.net and list yourself there to get listed with 411. And again, it's one of those little checks, right? So we want to get that check for the lender's computer. So we're getting more checks than X's, which gives us a chance in a manual underwriting review to actually get approved. And Shakara says, this is good info. I thank you for turning in. All good is pronounced the road. Okay, the road. Thank you very much for making me not look like a fool messing up your name. I appreciate that. And Mike says, also, Ty, I really did start my business on Sunday. So how could Chase know that quickly that I have a business? It is because you have a DUNS number set up. Yes. DUNS number will trigger something from Chase to send you that. And Karma says, that's so true. I just learned the hard way. No iPostal. Yes. We had that whole conversation for like 30 minutes on another live stream. And I'm glad we were able to get that corrected. Hopefully, Karma, you're on your way now. So you got to have an EIN number. There's some numbers you need. You need an EIN number. You need a DUNS number. Mike just said that too. Mike said, I went and got a DUNS number and I'm starting to get credit card offers. So get a DUNS number with Dun & Bradstreet. You can go to creditsuite.com/DUNS, D-U-N-S, and that will get you a DUNS number with Dun & Bradstreet. So you want to go ahead and get a DUNS number. You want to set up an EIN number. These things go a long way to fundability as well. I'm not going to spend a bunch of time on this. SIC codes aren't as important as NAICS codes, but you really need to own this as well. Know exactly what your industry code is. Try to choose one that's low risk, not high risk. We talk about high risk industries all the time. There's even training at youtube.com/credit suite on what to avoid. Very important. Lenders or credit insurers, you want to give them the perception you're in a low risk industry. If you're in a high risk industry, well, then one of two things happen. They either automatically deny the application, or the second thing is you face more or greater underwriter scrutiny. We don't want that. So we want to choose a harmless NAICS code, the most harmless one we can choose for our industry. And you got to be careful. I'm not telling you to lie. We don't want to lie about it, but I use Credit Suite as an example. We can be classified as an educational company, a software company, or financial services, because if you look at what we do all three of those. So we choose software because software gives us a low risk. We're not a high lending risk with software, but it also gives us a high multiple for enterprise value. So if we sell the business or do whatever eventually, we can get the highest multiple or valuation for the business. So when I think about NAICS, I think about both those factors. What's low risk when it comes to lenders, but high desired when it comes to selling a business? SaaS companies, software companies like this, are software as a service, are very popular. They get 5, 10 plus X multiples on valuation. So you got to take those kind of things into account, but you want to make sure you know your NAICS as well. And again, you want to set up your business as a corporation. In the years I've taught this stuff, I just got away from even giving you a choice. And I'm just saying, just set up a corporation. Set up an LLC, set up a C Corp, a C Corp or an S Corp. An LLC is not a separate entity per the IRS. I just set up an LLC in Montana, and they said, is it an S Corp or a C Corp that you're setting this up for? And I said, okay, I want to set this up for a C Corp. So you choose between which corporation type you want. Another question I get, do I do a C Corp or an S Corp? I'm not an accountant. This isn't accounting advice. I suggest you talk to an accountant. I can tell you my perspective, and here's what it is. Well, I'll tell you the way it's normally done, then I'll show you my perspective. An S corporation, all of the tax stuff comes down to you personally. So if I have a business that loses money, the loss comes to my personal taxes, and I probably don't have to pay any personal taxes because I lost money because my business did. A C corporation, the business and me are filing taxes separately. The negative about a C corporation, The corporation has to pay taxes. Then it pays me and I have to pay taxes. So I get double dinged for taxes. So most don't do a C corporation as a brand new business. They switch from S corp to C corp down the road. You can easily do it with your Secretary of State or through your accountant. Now, an S corporation is where a lot of people start, then eventually they move it to a C corp. I'm different. I no longer want businesses to have any impact on my personal taxes. I want to be separate. For the first time in many, many years, I want to be separate. I'm W-2 to my company. I get paid a regular paycheck. Taxes are taken out. I pay taxes at the end of the year or get money back just like a normal W-2 person. I no longer want my businesses to impact that. So I now do everything as C Corps. Even if I get double dinged on taxes, that's fine for me. I'm willing to take the hit. But again, it's personal preference. I did S Corps for a long time before I switched to that. In a lot of cases, a lot of people start with S Corp and switch to C Corp. But what I am saying is avoid partnerships if you can. Avoid sole proprietorship at all costs. You should never be a sole proprietorship. Choose an S Corp or C Corp. Goes a long way to giving you a ton of credibility. And Steve says, just had a thought. Do we need to worry about business credit, identity theft like personal credit? So is there something like the LifeLock we need to protect it? Well, you're going to wish you didn't ask that question because now I'm going to sit on a soapbox for me. I'm going to tell you something you all really need to know because I know a lot about credit, right? I've written 2 of the best-selling books on this topic, and I'm not telling you that to brag. I'm just telling you because I want you to understand they have extensive knowledge when it comes to consumer or commercial credit. First of all, a lot of identity theft when it comes to consumer credit is complete BS bogus. It's not identity theft at all. Okay, so here's what happens. Commercial and consumer credit will start with consumer credit. Okay, you don't have a credit report. You don't have one. TransUnion, Equifax, Experian, you don't have a credit report with any of these 3. You might think you do, but you don't. What really happens, so let's use TransUnion as an example. What happens is TransUnion has all this data about you and me and all of us, right? And it's floating around in their system, just floating around like whatever particles are floating around in space, right? Just floating around. Then when somebody goes to TransUnion and requests a credit report on you, TransUnion grabs all the particles of information they think belong to you and whoosh, they pull it into a report and give it to that person. That's how credit actually is. All of our data is floating around. Oh, I want information on Ty Crandall. Oh, this information looks like it belongs to Ty Crandall. Whoosh, whoosh, here's your report. That's how it works. So most identity theft isn't identity theft. What it is it's other people's information getting pulled onto your report instead of your information. Now, this most commonly happens when people have similar information to yours. So let me give you an example. Consumer credit is based on 3 things: name, social security number, and address. These 3 things are what a credit bureau looks at to determine what information is yours and what information is somebody else's. So let's say my dad, his name is Gary, it's not Ty, but let's say that my dad's name is Ty Crandall and I'm Ty Crandall Jr. I already have a problem. One of the 3 things I already have very similar to somebody else. Somebody else already has my name. They already have, for example, I'm a junior, I'm a senior. There's a handful of us Ty Crandalls in the world. I follow them all on social media. My friends think I'm crazy. I've watched them for years. They watch me. We communicate with each other. I don't know. People have my name. I want to know those people in my circle. It's weird like that. I don't know. So second problem, my social. I'm born in Indiana. The first 3 numbers in your social indicate where you're born, okay? So if you're like a 100 something, you're in that New York area, right? If you're in the 300 something, you're in the Indiana, Illinois, Midwest area, okay? If you're, so that's how it works. I can tell somebody where they're from based on the 3 digits of their social. I used to travel around the country, and I did this all the time. People would tell me their social was on doing a credit app, and I'd say, oh, you are from Montana. And they're like, how did you know I'm from Montana when we're in like Iowa? And I'm like, well, because your social tells you that. So now my dad has a similar name to me. He's senior, I'm junior. Now my dad is in the same state as I am. We were born in the same state, so our socials are similar, okay? So now the problem is if our address is similar, if I still live in Indiana, then I got a problem. I have somebody that has a similar name, similar social, and similar address. And so now is a very good chance that the credit bureaus are going to think that information belongs to me and put it on my credit report. And guess who sells credit monitoring? Guess who's the biggest reseller of credit monitoring? The credit bureaus. Ta-da! So you see what happens. Now all of a sudden, information appears in your credit report that's not really yours. You think somebody stole your identity. You go get credit monitoring from the credit bureaus to monitor it, and they have a whole other product. And if you look at the growth of credit monitoring from the bureaus and the revenue credit monitoring generated from the bureaus, you'll understand why identity theft is as big as it is. Okay. Not saying it doesn't exist, but I'm just telling you how the majority of it occurs. Now, the second question is, does identity theft happen in the business world like consumer? You don't really need to monitor because it's not really a big thing in the business world. But in the business world, we look at your address, okay, and your name. So instead of it being 3 indicators that help us assign a credit profile to you, it's only 2, your name and your address. So you have to be careful because if you ever change addresses, the credit bureaus will oftentimes create a second credit profile thinking it's a whole new company when it's not. You just change your address. So whenever you change your address, you have to tell the bureaus or you'll see secondary credit profiles created. And it's not even identity theft. It's because they think it's 2 companies when it's 1. Okay, so a little bit of background on identity theft on the consumer side, but some information as well that you should know about business. You never want to have a similar address and name as another business because you will get information mismatched on your credit report. So hopefully that helps. Mike says, S Corp is my fave. Personally, depends on situation. Carmen says, I have an LLC, sole proprietorship, a nonprofit organization. Could I get one office that has different suites? You could, yes, you could. But again, I get rid of your sole prop. You're not going to have any success getting credit funding for that. You might have some, but it's not going to be the kind of funding you really want to get. Okay, again, we talked about DUNS numbers. Get your D&B DUNS number. It's very important. Get your EIN number. We talked about that as well. Get a business bank account. It's very important because, look, a lot of places, like if I go for business credit cards, they don't need to see my bank statements, but they ask me for a bank reference. You don't have a bank reference if you don't have a bank account. So you've got to set this business bank account set up quickly so you have bank references when they ask for it. But here's another reason why. You have a ChexSystems credit score and report. So you are scored. You have a secret credit score, lenders and credit issuers see, that actually looks at how you actually manage your bank account history. Okay, this is through a service called ChexSystems. And you have to be very careful because, again, now I put something very special together for you. You're welcome. It's at creditsuite.com/ChexSystems. You can see right here, CHEXY, or excuse me, CHEX Systems, ChexSystems. And here you can get your credit report from ChexSystems for free. You can get your credit score from ChexSystems for free. You can put security freezes, alerts. You could dispute stuff. Everything you need to know to get and manage this credit report, I had created at creditsuite.com/ChexSystems. So you can get in and get the stuff corrected. But you have credit reports and scores that actually just have to do with your bank account. And that's another reason you need to have a bank account set up because these things are out there and they're looking at this behind the scenes. The other thing is that banks have something called a bank rating. If you look online, I'm the only dude that talks about this, but it's an internal credit score that banks use to determine if you should be lent money or any of their products. If you want to qualify for a credit card, credit line, or loan in the bank, you have to have a good bank rating. And bank rating and ChexSystems credit scores are both higher the longer you have a bank account open for. And if you ever change ownership, they look at the ownership, or they look at the bank account open date as when the actual business started. There's a lot of reasons you need to get a business bank account set up, but when it comes to fundability, it goes a long way. Have a business bank account set up and set it up as early as you possibly can. So why do lenders care about this? Why do lenders care about all the stuff I'm telling you? And the reason is because for $75 and 5 minutes of my time, I can go and set up a business in the state of Florida. Right now, I can go right now to sunbiz.org. It's a 5-minute process. It costs me $75 and I can set up an entity. In a world where it is so simple to set up businesses, lenders need ways to determine a hobbyist, somebody that's just running a business as a hobby, and somebody that legit is running a real business. They need to differentiate that. So if I look at this dude, the hobbyist, chose a sole proprietorship because it's the cheapest way to go. Didn't even get an EIN number. Doesn't have a business address, is using their home address, uses a mobile phone for their business phone, has some hack website they set up with Wix on Wix's URL, is still using a Gmail type email address. I mean, rookie mistakes that I think it's rookie mistakes because I teach about this stuff all the time, but stuff most people don't even think about or know. You got this dude. Then you got this dude, right? And this dude over here has a business that's a corporation, has a business address that is a virtual address. It makes it look like they're in a big building in Tampa, Florida. They have a business phone number set up. They have a website that looks stellar, that reflects what they do. You search 411, you find them. You see it's a clear difference between these two people. This is a hobbyist and this is a legit business. So this is why lenders look at this stuff. Because if you just say, hey, my name's Ty Crandall, my company's Credit Suite, I want to apply for a credit card, they need more information to determine if I'm a hobbyist or if I'm legit. And all of these things that I've talked to you about, if you really think about it, separate business address, separate business phone number, website, professional email address, a license for your business if you can get one, okay, listing it with 411, having a bank reference, indicating you're a low-risk industry, and knowing what your NAICS code exactly is. Think about this person looks legit. And lenders are check, 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 check with all their secret criteria that just makes you look legit. So that's why how you set up your business matters so much, because it's all compensating factors. And if you have none of it, and then you have personal credit issues and you wonder why you can't get money, it's because you don't look legit, and then your credit reflects that you don't pay your bills. So why would somebody want to give somebody money that doesn't have a history of paying their bills and that doesn't even look like they're legit? But if you come in, you look legit, your business has a history of paying its bills, and you have some credit issues, okay, so what? The business is legit, it's solid, it's got its own credit established. This matters less and less and less. Personal credit's just less and less and less of a factor because this is a kind of business that they want to lend money to. So Mike says, Ty, should we freeze our LexisNexis and dispute hard inquiries? I don't ever recommend you freeze LexisNexis at all. And here's why. I don't like credit freezes at all on anybody's credit report. And the reason for that is that it automatically triggers a red flag for lenders. The minute they see a credit freeze, the minute they see your credit profile locked down, they immediately get concerned. Okay, and I'll give you an example. I bought a car in Washington State. I'm in Florida. In case you don't know the geography, it's as far away in any points in the United States. I'm pretty sure this is the greatest distance ever between any other states, right? So I had a security freeze put on my personal credit report. They made me fly to Washington State to sign the paperwork. Here's what my day was like. I left in the morning. I flew all the way to Washington State. I signed the paperwork. Then I flew all the way home red eye that night. That was what my actual day looked like, okay? So again, security freezes, a lot of really nasty, bad stuff happens when you have security freezes. So I don't recommend that you have security freezes on your credit report whatsoever, because in doing so, in front of my son's friends here apparently, so my dogs are freaking out, so hopefully you don't hear that, because it just creates all kinds of problems. It typically creates more problems than what it solves. So you also got to make sure that your information is consistent. One of the biggest reasons you'll get denied, and one of the biggest compensating factors to let lenders and credit issuers know you're legit, is that all your information matches up. If they check your website, your social media pages, your Secretary of State, 411, and the name is different, the address is different, the phone number is different, they can't even verify it's the same business, and they think it's fraud. And I say this all the time, the number one reason that applications get denied for credit and financing, it's not your credit. It's not your income. It's none of that stuff. It's one thing. They think it's fraud. They think it's not legitimate because they can't match your business. They take your application and they go try to find your business. And then they say, I don't know, this looks like the business, but the address is off, the phone number's off. Let's go to the website. Well, this name looks the same, the URL is the same, but the address doesn't match the application. When they find all this mismatched data, the computers say automatically this is a fraud application. And then an underwriter's usually not going to trump that. They're not going to usually overcome that, because think about it. Think about if an underwriter approved an application as non-fraudulent when the computer said it was fraudulent, and it ends up being fraudulent. That person's not going to have a job very long. So again, this is the biggest reason that applications get denied, is that it's inconsistent information. Everywhere your business is listed, it needs to be listed the same way. It needs to be listed on your website, your social media pages, your yellow page listings, your bank accounts, your utility statements, your license with Dun & Bradstreet, with the credit bureaus, with your bank. Everyone needs to have exactly the same information, which means Stewart & Sons is different than Stewart & Sons, okay? Is a difference. Stewart & Sons Inc. is different than Stewart & Sons. You need it to be consistent across the board. So when I say name, you need to choose Credit Suite Inc. or Credit Suite. And if you're going with Credit Suite Inc., it needs to be everywhere you apply. Everything needs to be exactly the same. So some things to keep in mind there as well. Okay. And Mark says, starting business credit, business word to use best credit in the name. No, I would not use credit in the name because credit indicates you're in financial services and it's harder to be able to get credit financing. Okay. So again, you got to make sure that that business address and information is listed everywhere the same. If it's not, very good chance you're going to get denied for fraud reasons, if nothing else. Okay, so let's talk about financial statements. Look, a lot of times lenders and credit issuers ask you for things like bank statements. They ask you for tax returns. They ask you for P&L statement. I always ask myself, why do they want this information? And I try to reason that out of my head. I never blindly send information into a lender, ever. I always say, what are they looking for? What are they thinking about? The other day, I did a presentation just on what they're looking for in your bank account so you know what to fix to make sure that you're more lendable. Okay, but when it comes to financials, here's what they're looking for. Number one thing all lenders look at, it's the number one factor everybody cares about. Are you going to pay them back? That's it. All lenders and credit issuers really care about is your likelihood to pay them back. That's all they care about. So when they're looking at a bank statement, for example, they want to see more money going in than coming out. They want to see you have money at the end of the month. They want to see you're not overdrawing the bank account with non-sufficient funds. All those things could indicate that you don't have the money to pay them back if they're all negative, right? If I have a bunch of non-sufficient funds and I'm negative balance at the end of each month, how does that look to a lender with the likelihood that I'm going to pay them back? So you want to make sure that your bank statements, your financials reflect that you could pay them back. Same thing with P&L statements, with balance sheet. A balance sheet, how much money you got? If you don't have any money, it's going to be hard to get money, okay, from a lender or credit issuer. If you have a P&L that shows you're losing money every month, lenders or credit issuers are going to be pretty concerned because you're losing money. So how are you supposed to pay them back if you're already in the red, if you're already negative? So when you supply financial statement, and that's the factor, is that you can't go into a bank and get a $500,000 credit line or a $250,000 credit line when your tax returns are showing that you're losing money. I say this all the time. You show me a business that has $1,000 profit at the end of the year and one that has $1,000 loss, I'll show you term loans and lines of credit that the one with the profit can get and none of which that the other one can get, even though it's only a $2,000 difference. One's $1,000 profit, one's $1,000 loss. Not a big difference. But here's the deal. Lenders and credit issuers want your business to be profitable, to be making money. If it's not making money, then they're concerned of your ability to pay them back. So at some point, you have to grow the business where you actually are paying some taxes and showing some profit, because that tells lenders that, hey, you're actually claiming profit. You're willing to pay taxes. You're not trying to hide all the money and write everything off. That is an indicator that your business is doing very well, that it's healthy. So these are some things that lenders are looking at when it comes to financial statements. They're looking to see if your ability to repay, and profitability goes a long way towards that. Now, they may actually ask for personal financials, like in SBA's case. But again, are you paying taxes? Are you profitable? Goes a long way to making sure that those financial statements are solid. So when we talk about establishing business credit, not the training for that, you can go to youtube.com/credit suite, find a ton of videos, quick overview, improve your fundability, get credit with initial vendors like Uline, Quill, etc., that will give you credit that report to the credit reporting agencies. They give you like terms like net 30. So you need about a handful of those accounts reporting. Then once you have those, you can move on to retail credit. You can move on to Staples, Office Depot, retailer stores. Then after that, you can move on with about 8 accounts reporting to fleet credit, BP, Chevron, Sunoco, fuel stations. With 14 accounts, you can get auto financing. You can get computer leases. You can get Visa, MasterCard. Business credit building in large part is based on how many trade lines you have. Okay, it's obviously not as easy as I laid out to be. There's a reason people pay us thousands of dollars to help them do it. And it's because there really is tiers of credit you want to apply for, and what you do in what order is what makes the process go. You only ever, if you do this right, like our clients are only ever applying for credit they know they can get. So it's why they get to the end in 6 months and like others take 2 to 3 years, because they apply and get denied, get frustrated, stay back for months, and then again. So you just got to make sure that you're building credit, and the more credit accounts you get on your business credit reports, the more types of credit are going to open up for you. You also should monitor your business credit reports. Is the information on there correct? Is your NAICS correct? Is your address correct? It helps you avoid a lot of denials. You can get it at creditsuite.com/monitoring. It's $24 a month, guys. $24 a month. creditsuite.com/monitoring. Get your business credit reports with D&B, Equifax, and Experian. And these are the main ones they're looking at. SBA, some others like KeyBank, Huntington National Bank will look at FICO SBSS score as well. Training on YouTube about that. But to give you an idea, FICO SBSS combines commercial and consumer credit scores, and it typically weighs commercial credit scores heavier. So if you just build your business credit, you're probably going to have a good FICO SBSS if your business credit scores are good. But you really want to build out your credit. These are the scores and bureaus that lenders are looking at. And again, by having established credit here, it goes a long way towards giving you compensating factors. And these are some things that they're looking for in the business credit scores and reports. How well the business consistently makes on-time payments, an estimation of how long the business will be able to last during current data, how long it's going to last. I mean, what are the utilization, these other factors as well to show how you're managing the money you have, how the business ranks compared to other businesses in the same industry, really problematic if you have the wrong industry on your business credit reports, and much more. So again, the business credit reports and scores reflect your likelihood to repay, and they're looking at all this information, including public records, et cetera, to make those kind of decisions. Now, again, personal credit absolutely is a factor. Okay, there are alternative lenders that will lend you money just based on personal credit quality. We call this credit line hybrid. You can get $150,000 in credit lines using your credit or somebody else's. And almost all loans and credit lines until your business establishes a ridiculous amount of business credit, it matters. So business credit established isn't going to get you high limit credit lines by itself. But if you do a lot of the things we talk about today, you are going to be able to qualify for these. And when it comes to that level where you want $250,000 credit lines, loans, et cetera, you're going to have to be ready to pony up your personal credit. It needs to be good in order to be able to get approved. Get your financial house in order, right? Good personal credit, good business credit, get your financials straight. I have a guy I'm talking to right now about buying his business. He doesn't have any financials, no financials. So it's really tough to go try to sell the business when you don't even have financials prepared. You got to get this stuff in order, because by having your house in order financially, it's going to make it way easier to get the money you need and to be able to get the terms that you need. So personal credit scores are based on 5 factors, if you don't already know. Payment history, how you pay your bills, 35% of your score. Utilization, what percentage of credit you're using, 30% of your scores. Okay, length of credit history is 15% of your score. Credit mix is 10%, and so is new credit or inquiries is 10%. So since this is about personal credit, let me give you some tips on every aspect of FICO that you typically don't hear about online, because a lot of people don't know this well enough as they should. Before I do, Mark says, I'm buying your reseller program. Is there a way to purchase a list of businesses with low credit scores? You can. Yeah, Info USA has great lists. You absolutely can go to Info USA and do that. And Mike says, Ty, you've made me look at helping others to understand this. Do you know when the cert will come out? I don't know. I do not know. I think our certification will come out later this year, but that's all I can tell you. Also, how can someone create a business that will report to the credit reporting agencies for people? If you go to creditsuite.com/reporting, creditsuite.com/reporting, I put together a guide that gives you information on getting your customers' payments reported to the business credit reporting agencies that I think will help you. And so that will give you the information. Okay, so let's look at personal credit. Since this is about getting money with personal credit, by the way, getting value, hit the like button, hit the love button, smash that, and give me some love if you're getting value from this. So let's look at this. First of all, payment history, paying your bills on time, makes sense. You need to get as many accounts on your consumer credit reports as makes sense for you, because the more positive payments you have, the more it offsets a negative payment. And the newer, the older a late payment is, the less impact it has on your overall credit. Utilization, 30% of your credit score is utilization. A lot of people think it's credit cards. It's not. It's all credit on your credit report. So this means if you ever get a car loan, if you ever get a mortgage, then what's going to happen is your consumer credit scores are going to go down. I have a very good friend of mine that didn't solicit me for help, and she actually made this mistake. She's trying to get a mortgage and then literally just got a car loan. And I'm like, why would you do that? Like, you're going to drop your scores 50 to 120 points, and that's going to jeopardize your ability to get a mortgage. I didn't know that. It does, because utilization is a third of your overall score. You got to keep credit card balances very low, as close to zero as possible. You want to use them a little to show usage, to keep those limits as low, or the balances as low as possible. Also, if you get a new mortgage or a car loan, you're going to drop your score 50 to 100 points typically. So don't go get one if you're looking to get the other. Give yourself some time Otherwise, it creates issues. And most importantly, add as much available credit to your credit report as you can. And we'll talk about other factors too to think about with this. But, get added as an authorized user to a family member's account, for example. That can add a lot of what that has high limits because they have good credit. That can help you dramatically. If I have bad credit, I go to my dad and I say, "We add me as an authorized user. I don't want to use a credit card. I just need that credit limit on my credit report." If my dad did that, that alone could raise my scores 100 points because the utilization is a third of my score. It's a really big deal. And the payment history with that account can help. So add as much available revolving credit card as you possibly can. Credit mix. Your best credit mix per FICO is 1 to 2 car loans, 1 to 2 mortgages, 3 major credit cards, not store credit cards, major credit cards. Stay as close to those recommendations as possible to max out the credit mix aspect of your score. Length of credit history. Length of credit history, you can do nothing to control besides get added as an authorized user to somebody else's credit card account they've had in long standing, something to consider. And the other thing is that new credit. Don't put an inquiry on your credit report unless it's going to result in something. Be very sure. This is why I tell you to do the fundability stuff first, because FICO scores like this, it might ding you if you have inquiries on your credit report, but it dings you more if you have inquiries that don't result in a loan. Okay, so you want to make sure the inquiry you get results in a loan. So I'll give you an example of how me, a credit expert, does this. I just went and got a car. Okay, I have vetted my lender. I know my lender. I know him. He knows me. He's my guy. I'm not going to go to a car dealership and let them send my application to 5 different lenders and pull it themselves. I want 1 inquiry and 1 loan. That's what I want. So I go to my one lender. He puts 1 inquiry on my credit report. He approves my loan. The loan shows on my credit report. 1 inquiry, 1 loan. That's what will help the new credit aspect of my FICO score. An inquiry won't lower your score. Groupings of inquiries will. When you go to apply for 5 credit cards at the same time, it's going to drop your score. 1 credit card might not. So those are some advice to focus on each aspect of your score to improve that as well. So bad personal credit, it's a problem, but doesn't have to be. Starting business credit report and score kind of gives you a little bit of a fresh start, not to ignore your personal credit, but it does give you a positive credit profile and score that makes it easier to get loans or credit lines, get your financials in order. Focus on the tips to improve your personal credit. Build out your fundability. And of course, if we can help you along the way, give us a call. We work with all kinds of funding sources that can help you get financing, even if you have credit issues. And you're entitled to a free consultation with us. On the consultation, we'll help you get your credit reports for free with Dun & Bradstreet, Equifax, Experian. Go over them with you, give you tips and tactics to build your business credit. We'll do a fundability assessment and talk to you about building your fundability, improving it, what you need to fix there. We'll do a funding qualification to tell you all the credit financing you can get now. I would say 9 out of 10 funding programs we offer work for people with bad credit. 1 out of 10 we have won't, like SBA or Credit Line Hybrid. The other 9 out of 10 we have do. So we can help you for your free consultation, 877-600-2487, info@creditsuite.com. Guys, look, that's the best way to get a consult with us. If you scheduled today, you're scheduling out a week from now. I mean, we're just slammed with consultations. So we're even hiring 2 new sales reps on top of a 3rd that we already have, somebody to help you through this process. So again, if you don't want to wait to actually schedule, give us a call or email so you don't have to wait a week or 2 weeks for us to talk to you. And if you got value, hit the like button, hit the love button. It's the only thing I ask during this is hit the like button, hit the love button. If you walked away and got value and now know a lot of things that are going to help you get money, then by hitting the like and love button, you tell Facebook and YouTube, hey, this is good information, and they show it to other people, and then you help me accomplish my mission in life, which is to help as many entrepreneurs get capital as I possibly can. It means a lot to me. And also make sure you subscribe on the channel you're watching on. YouTube, hit the bell beside the subscribe button and select all to be notified. That way you get notified when we go live. We go live Tuesday and Thursday at 1, 11 o'clock on Wednesday. We have hundreds of videos on our YouTube channel, daily tips on Instagram, Facebook, and Twitter, as well as a podcast where I have all these guests that come on that teach you how to start and grow a business. It's not even financing stuff. I teach financing on there, but I bring all the people in that teaches you the nuances of building a business, even exiting a business for maximum value. So all of that happens on our podcast, and all of our social links and podcasts are available at the top right of our website, creditsuite.com. So make sure you check that out, creditsuite.com. Okay. So let me make sure all of your questions were answered. Mark says, you provide by far more information for free than most ever sell. It's very true. And there's a reason for that. A lot of people ask me why I give away so much information. And here's why. If your cause is to really help people, then them having money to pay you to accomplish that should not be a barrier. And that's the way I look at it is, look, I think you all understand that if you work with us, we're going to get you a lot better results and faster than you'll get on your own. You know that. But those that can't afford or want to try this on their own, I want to make sure you're empowered with the information to at least succeed, whether you pay me for it or not. That's just my philosophy. Everybody obviously operates a little bit different than I do. And Mike says, will getting tech credit line hybrid affect personal credit scores? It will when they apply for the credit cards, because that will put inquiries on your credit report. But to get pre-approved, it won't. So it won't hurt your credit report because a lot of the credit lines report to the business credit reporting agencies, not on your consumer, but there will be inquiries when they actually go to apply. So some things to keep in mind. Tanisha says, what was the credit mix again? Credit mix accounts for 10% of your score. FICO prefers 1 to 2 mortgages, 1 to 2 auto loans, 3 major credit cards. If you have that mix, that's the max credit mix that they want to see. And Ronnie says, tired of trying at this point. Well, don't. Why are you trying? Hopefully, if you followed a lot of the advice here, that's going to be able to help you there. And Nalim says, can you do it for me? Business credit building, nobody can do for you. No, the same as nobody can help you with consumer credit, but we will hold your hand and walk you through the process of building business credit, and we can help you through the process of getting funding as well. Just give us a call, and we'll help you through that. So I'm going to go ahead and wrap this up. I look forward to seeing you on our next training. We're talking about more cool ways to grow your business. I will not be here for Tuesday and Wednesday's training because I will be speaking at Credit Con, an event here in Clearwater that teaches credit professionals everything they need to know about the credit industry. So I'll be speaking at that event this week, Monday, Tuesday, Wednesday. You can find me there if you happen to be in Clearwater, Florida, and I will be back with you next Thursday. Somebody else will be filling the void and be able to provide education. So we'll see you again on Tuesday on our next live training. And I look forward to seeing you and talking to you more about more cool ways to get money to start and grow your business. Don't forget to like and subscribe.